Look, man, I told you I'm gonna be fully transparent. I'm gonna document my trading journey with this Topstep funded account. It's not a funded account, it's a combine. With this Topstep combine account, you can see I'm managing a balance of $50,000. Right now, I'm at $50,279. That's my total. My total P&L is $279.69, as you can see on the screen. And let me just go ahead and make that larger for you guys so you can see it better. So as you can see on the screen, right there we have my total P&L, $279.69. Today my win rate was 100%. There was no losses for today. My overall trading win percentage is 66.67%, which is really nice. And it should even be higher than that, but there was a few trades that I took by mistake that I shouldn't have because I got into the wrong instrument. And yeah, I mean, it is what it is. I'm still learning the platform, still getting used to it because this is my first time having a Topstep combine account. So my very first trade that I took, actually, there was a mistake that happened, which resulted in me being in the red, $43 and some cents. Yep, $43.24. That was March 4th. So that was the first day that I traded. It was a Tuesday. I only took one trade because my account automatically closed the trade in a loss, and then locked itself out for the remainder of the trading day. So I couldn't make any more trades. I had to wait till the next day. There was some technical issue where it shouldn't have closed automatically. It shouldn't have closed automatically because I didn't have my settings set to do that. But that's I don't feel like explaining that today. So you can see the following day I took 10 trades. That's a lot of trades, but I'm scalping on the 5-minute, and I'm getting back into rhythm because I haven't traded for a while. Prior to me getting into this Topstep combine account, but I was actively investing in crypto and stocks, of course, but I just wasn't actively trading like how I trade now. So 10 trades, $201 profit for Wednesday, March 5th. That was last week. And then the following day we took 12 trades and I had a losing day for negative $423. All right, a $423 loss. So I'm gonna show y'all what happened that day. So I missed out on a nice chunk of cheese, and then I took a trade after that trying to make that money that I missed out on. So that's what resulted in me having a red day on March 6th. But again, I'm gonna show you guys the trades I took. Also, I live traded. I did a recording of me live trading today, so I'm gonna show that later on in this video. So you guys can see exactly like what my mind is like, what I'm saying as I'm watching the charts and things like that. You know, you guys can catch, you know, what I'm looking for in real time. You know, again, I told you guys I want to be fully transparent. I'm not a fake guru. I show my losses and my wins. And yeah, so you can see I only took 2 trades Friday. That last Friday, that was March 7th. I took only 2 trades because I don't trade Fridays typically, and there was a lot of news coming out that day. So I just got in and got out the markets. Happy with what I profited, $73.52. Don't want to overtrade. Don't want to, get too greedy or anything like that. It was a Friday, and I don't trade Fridays typically. I usually trade Monday through Thursday. I completely avoid Sundays, and yeah. So yesterday had a profitable day, $209 for 12 trades. Yesterday, March 10th, that was a Monday, and 12 trades is still a lot of trades, but a winning day is a winning day. I'm gonna take it. You know what I'm saying? Pause. No James Charles, no Shawn Combs. And then today we only took 5 trades. Now today was a great day because today we only took 5 trades, which is what I like. I don't like to overtrade. I don't like to be in the markets for too long. I want to get in and get out. I made $262 profit today. I could have made more if I would have just put in more contracts. I was trading 2 contracts, gold and MES. That's the micro S&P 500. If I would have used 4 contracts, this could have been easily, this could have easily been a $500 day. You know what I'm saying? This could have easily been a 500 some dollar day, but I'm being very conservative. My starting balance was $50,000 with this account. All right. Typically you want to trade. Typically you only want to risk 1 to 2% per trade. So if I'm risking 1%, that means I'm risking $500 per trade. But I wasn't even risking $500 per trade. On average, I'm risking like $80 to $200 a trade. You know what I'm saying? So, you know, even 200, that's not even 0.5%. You know what I'm saying? That's like right beneath. You know what I'm saying? That's 200 isn't even half of 500. You know what I'm saying? 250 would be. So that's not even 0.5% of my trading balance. So super conservative. Again, could have made more money. Could have made double or triple the amount that I made today. Could have made double or triple the amount that I made yesterday. But the goal is $200 a day, $200 profit a day. I've already hit 3 $200 profit days. I just need to hit 2 more, and then I'll be eligible for a payout once I pass the combine. Also, I have to hit that $3,000 total profit goal. So once I lock in on these two, once I lock in and get it, once I lock in 2 $200 profitable days, then I'll have 5 total, and then I'll be good on that benchmark. And then I just need to hit that $3,000 total profit goal, and then I will pass my combine. So now with that being said, you guys have seen my trades. You see them right here. Boom. I'm gonna show you my trades I took today. You see no losses, right? No losses. I made $202 on a gold trade. I only took 1 gold trade, and then there was a trade I got in here with 2 contracts on MES for $45, and then there were 3 separate trades for 1 contract with a profit of $5 here, a profit of $250 there, and then a profit of $13.75 there. So I'm gonna show y'all exactly what those trades look like on the chart. You know what I'm saying? I'm gonna do a quick rundown because I already did a recording of me live trading. So I'm just gonna do a quick rundown of all of my trades from last week up until this point. And yeah, so let's go ahead and get that over with. Okay, so for this trade here that I took on gold, I took on the 5-minute time frame. But I didn't start off looking at the chart on the 5-minute time frame. I started off looking at the chart from the weekly time frame. Let me tell you why. When I identified the previous week's high and the previous week's low, I marked those on the chart, and then I looked at the current week's candlestick and saw that we are closer to the previous week's high than we are to the previous week's low. Okay, and also the previous week's candlestick is a bullish candlestick, so that tells me more than likely this week is going to be bullish as well. So then I dropped all the way from the weekly time frame straight to the 5-minute. I didn't go to the 4, then to the 1 hour, then to the 15-minute, like a typical top-down analysis. I went straight to the 5 because I just needed to know what the weekly bias was, so I can then go execute on my 5-minute time frame, because on the 5-minute time frame, that's where I make my entries, and that's where I identify demand and supply zones. Okay, that's my strategy: supply and demand. Primarily, that's what I trade: supply and demand zones. Do a little bit of resistance and support, but primarily demand and supply. And even those two things, support and resistance and supply and demand zones, those kind of are like this same concept, but it's not the same thing. It's not the same thing. Like, I'll show you an example right now, just to compare, right? This is resistance, okay? Let me show you some support. This is support right here. Hold on. This is support. This is resistance, okay? This is a demand zone. This would be a demand zone. This would be a demand zone. And this would be a demand zone. Now let me show you supply setups. You're going to see a lot of supply setups in bear markets. Okay, you're going to see a lot of supply setups in bear markets. So let's just see if we can find some. Okay, look, here we go. One right here. This is a supply zone. This is a supply zone. This is also a supply zone. You get it now. And also this would no longer be valid. Whatever zone this was, supply or demand, that wouldn't be valid. I'm assuming demand. Or that was a support zone, I think. But that would no longer be valid since we've mitigated right through that. So now let me show you exactly why I got into this buy here on the 5-minute time frame, other than what I showed you on the weekly time frame, the weekly bias. The reason why I got into a buy here was because I saw that we wicked at the top of this demand zone here, right? Wicked at the top of this demand zone here. Price came up, engulfed. It came above the previous candlestick that wicked here with a pin bar. If you guys don't know what a pin bar is, go ahead and study up on it right now. No, wait till after you watch this video and go look up what pin bars are. Pin bars are a candlestick formation that indicates a reversal, right? So when you ever see a small body like this and then a long wick at the bottom like this, when price comes down, and especially when it hits a demand zone like this, that's an indication that the price is gonna retrace back or the market is gonna reverse. All right. So when I saw we had a pin bar that wicked into this demand zone, and then I saw that this candlestick here came above the previous candlestick, which is a pin bar, which I didn't catch at the time that it did come above it, I was like, okay, it's looking like the market want to go back up, right? It's looking like want to go right back up because the market's still above the 200 EMA, right? Overall, I mean, we're in a bullish market, right? We're in a bullish market, as you can see. Price did pull back to this demand zone, but we're still in a bullish market, right? So I mean, it was just a straight drop into this demand zone here. We went through this demand zone, went straight through this demand zone, but then we bounced off of this one here. And what I typically see happen, honest to God, I can't make this up. You guys can go back test this and look for yourself. What I typically see happen is New York stock open, around the New York Stock Exchange open, around that time, you'll see demand zones get destroyed. You'll see like the first demand zone get destroyed and maybe even the second one. All right. That's what I typically see. I just wanted to let y'all know that. You guys can go and back test for yourself and find out. But here's an example right here. Like we saw, this was at 9 o'clock. You know, New York Stock Exchange opens at 9:30. The reason why you see the first demand zone get absolutely obliterated, and sometimes even the second one, typically when the New York Stock Exchange is about to open, is because people are preparing for the New York Stock Exchange. Right? There was even news that was coming out at 10, I believe, today about unemployment, I think, or no, not unemployment, but jobs being created, things like that. I think at 10 a.m. right? So you got that coupled with the New York Stock Exchange opening at 9:30. There's usually a sell-off right before the New York Stock Exchange opens. So again, you guys can go ahead and test, back test this and see for yourself. It's not even just with MES or NAS, Dow, it's with gold as well. Like you'll see gold drop sometimes, right before the stock exchange opens, a lot of times actually, and then it'll continue its bull run. You know what I'm saying? So just something to take note of. Keep that in the back of your mind for when you're getting on these, these markets in the morning, because you may want to take that into account with your entries, right? You may now want to wait till after the New York Stock Exchange opens to see what happens, you know what I'm saying, to see if price shoots up or if price shoots down. I took this trade, right, because I was like, okay, I knew I would have took this trade here if I would have gotten aggressive, right, at the break of this previous candlestick here, the pin bar. But since I didn't, I see prices came down here, I'm like, okay, my mindset was like, all right, I'm getting it at a discount. I would have took this trade up here. Why not take the trade down here at a discount? You know what I'm saying? I'll have a smaller stop loss than I would if I was up here. And again, I'm at a discount. Why wouldn't I buy at a discount? It's gold. You know what I'm saying? So got in for a risk reward 1 to 1.5. Simple. That's the signal that I put out in the Discord, right? So you see the profit level here, but that's not where I took profit at. I actually took profit up here. So I was trailing my stop loss as I was getting more and more into profit. I trailed my stop loss in profit, got stopped out up here, made $200. Here's the previous week's high right here at 29.30, and I mean exactly 29.30. And this is why you see on my channel numerous videos of me talking about key levels, because key levels are extremely important. So that's where I really wanted price to go to, but then I started seeing price coming down. So I was like, let me just go ahead and trail my stop loss, because I see we got two major bullish candlesticks creating fair value gaps, and we have a resistance here. So I'm like, okay, price is probably gonna now come back down here, retest this resistance for support, and then drive up. But knowing how the markets be sometimes, I'm like, you know what, I'm just gonna trail my stop loss and take whatever it gives. So that's what happens. All right, that's what happened. Moving on now to MES. I actually put this in the Discord. So if you took this trade, you made money. Your TP got hit if you took this trade. This second trade right here, I executed while I was recording live. While I was recording myself trading, but I didn't put this in the Discord. So you guys don't even have to, if you in the Discord and you like, well, why didn't I see this? I didn't put it in the Discord, bro. But when I got in here and I got out quick. I trailed my stop loss as soon as I was in profit. So my trail stop loss got hit in profit, and yeah, made some money on that trade too. And that was it for today. That's it for today. Now I'm going to show you the trades that I took last week. This is the trade that almost hit TP, and then it just went crazy. It went crazy. And this was at 9:35 that the market decided to go right back up. I told you guys, around that time the market's either going to shoot up or it's going to shoot down. I told y'all this. My TP level was set at, what is this, 57, 51. I stepped away from the chart as soon as, like, I was, I think, around here in profit. As soon as the market came coming right back up, that's when I got back onto my chart. I had to step away for a moment, had to take care of my baby, do some things. It is what it is. I would have trailed my stop loss in profit had I known that I was almost about to hit my TP. I would have, bro, what? So I ended up getting stopped out on that trade. It is what it is, man. Ended up getting stopped out. And then I tried to make that money back that I lost, right? So I got into the Japanese yen on March 6th. Let me just show you guys. I put, I believe I put these trades in the Discord as well. So I actually got stopped out on this first one here. Then I got, you see why I got in, right? Though we had a bounce off of the demand zone here. We're above the 200 EMA. You know what I'm saying? Price was even above the 13 EMA when I got in on an entry at the break of this candle. Got in aggressive. You know, we did get into profit soon after that, but then price came coming down, and we lost that trade. But I got in on another one right after that. I got in when we bounced off of this demand zone here. Yep. So we went into this demand zone, closed above it, got in at the break of this candle for another buy. Would have hit my TP if I didn't close early. You see, my TP was set right where we wicked at and came right back, and the market came crashing back down. My trade would have hit TP, but I closed early. It is what it is. I'm gonna take what I can get. And then you see here, I lost another trade March 6th on the yen. I mean, man, I think I got into like 4 contracts on this trade too, something like that, and that's why I lost over $400. Moving on, let me see if there's any other trades on here. So this was March 10th. Closed early on this trade. Closed my profits early on this trade too. Would have hit TP. That would have been a winning trade, but it is what it is. I'm gonna take what I can get. You know, just simple supply and demand strategies. Simple, like super duper simple, bro. I don't know what else to we had a break of this high here, and we had a bounce off of this resistance here, so I think that's why I entered, but I'm not too sure. But you see here we had a bounce off of this demand zone here, and then we had a break of this previous candlestick that bounced, that wicked off it. So got in on a buy on that one. That would have been a winning trade again, but I closed early. Let me see if there was any other trades that I can show you guys. And that's it. That's it for the yen. Let me go to gold. I said fold. I typed fold. All right. So this was March 10th. This was Friday, right? No, this was yesterday. What am I talking about? Tweaking. Lost this trade on gold. It is what it is, man. Got in here because I saw that we hold on, let me see. I think oh no, I was on the 1 minute time frame when I traded this. Okay, let me go back here now. I was on a 1 minute time frame, I'm pretty sure, when I had got into these trades. Yeah, lost that trade. I closed my loss early on this one, so it wouldn't hit stop loss. It is what it is, man. So I lost 2 trades that day on gold, but yesterday was still a profitable day. I profited over $200. I think it was $209, right? Correct me if I'm wrong. And here's March 7th. So this was last Friday. Quick win, you know what I'm saying? Quick win. Again, like super duper simple. Like identify that we were in a bull market, you know what I'm saying? We had some consolidation here. That's, you know, expected because this was from 3:50 a.m. to actually I wouldn't even say that's like expected for it to consolidate during that time, because that is the London session and gold does move during the London session. But yeah, so I saw that we had consolidation. The prices was rejecting this 29.30 level, right? Which then, you know, became that was the previous week high, right? 29.30. Yeah, that was the previous week's high. So yeah, we was rejecting this level again. I told you guys about those key levels. Those key levels are extremely important. Could have caught sales off this level for sure. If I would have saw this M form, could have definitely caught a sell here at the break of this structure. Could have took it down here, or could have took it to this level. If you want to trade against the trend, but I like to trade with the trend, so I'm only looking for buys. So I saw we had wicked off of this wick. Didn't come like into the zone. It didn't even tap like right off the top, but it came right above, right? It came right above. And then we had a bullish engulf and got in aggressive here. So it kind of went against my strategy, because I want to see that wick tap into that zone, but it is what it is. The next candlestick tapped into it, so that's good. Again, got in aggressive at the break of this previous candlestick here. Took it up here for 101, which was perfect because my TP was set within this fair value gap that had formed when the price came crashing down here to this level. So yeah, now I'm gonna show you guys footage of me actually trading live. All right, like recording of me actually, you know, in the trenches, showing y'all how I trade in real time. I'm on my 50K Topstep combine account, and right now I'm in I got 2 contracts for sale for S&P 500 in the left chart, and then on the right chart I'm keeping my eye on gold as well. We see that we just went through this demand zone, tapped into this one with a nice pin bar candlestick pattern here, so that indicates a reversal for me. Right now you can see I'm $35 in profit on my S&P trade here. I've already put it in the Discord. I'm gonna go ahead and show that to you guys too. Just give me a moment. So as you can see, I put in my Discord the trade that I took this morning. You can see that was posted at 9 a.m. It is 9:11 right now. So yeah, just wanted to go ahead and show y'all that my Discord is active. I've been putting trade setups in here. I've been putting trades in here for you guys to take. As long as you just go ahead and click that link in the description and subscribe, you'll be in. But yeah, I mean, my content though on my YouTube channel is more than enough content, free content for you guys to consume and and learn from, so you can, you know, implement the things that I do into your strategy, or just copy my strategy, you know, for exactly what it is, and do whatever you want with it. But yeah. So what I'm looking for on gold, bro, I want to, this got to break. This got to break on MES right here. This got to break, bro. Once this breaks, it's gonna come crashing down, bro. It's gonna come crashing down. Just watch. We wicked into this twice, right? So what made me get in, I actually got in on this candle right here. I got in on this green candle here. So I got in a little late. My entry price was 56.2075 cents. So I got in a little late. Like, I had just got on the charts when I saw this, you know, setting up. So what happened was, price came coming down right after we had a bull run. This was in the afternoon. I wouldn't have caught any of these setups because this happened during times that I don't trade. You know what I'm saying? So it is what it is. But I saw that we had a change of character here, or a break of structure. The market's kind of choppy. I don't know if that's a change of character or a break of structure there. Somebody let me know. Same thing, like same concept, but just a little different. Change of characters is when there's a reversal and then you see a break of structure. That a break of structure is what you see like during the trending market. But yeah, so I guess that would be like a change of character right there, which is an indication that the market is reversing. But also the market was below the 200 EMA. Here is also below my 200. I mean my 13 EMA. So I have two moving averages that I'm using, 200 and 13. So since it's below both of those, that's a good indicator that we're in a bear market now. On the smaller time frames, I'm on the 5-minute time frame, and I'm still keeping my eye on gold over here. We engulfed this candlestick right here, so maybe I would get in right now on gold. Maybe I should get in right now, since I would have took this trade. This is what I would have entered in if I would have entered aggressive for a buy on gold. I'm looking at the right chart right now. My stop loss would have been somewhere like right there. I would have went for 1-to-1 because my stop is so big. I would have just went for 1-to-1, boom, right there. I see price coming right back down though. Maybe I can get in for getting at a discount. I wouldn't even be risking much because I keep the same stop loss. I don't know though. Maybe I'll just see how it plays out. Maybe we can catch a morning start pattern, pin bar bullish engulfing. You know, this isn't a valid demand setup right here, so I'm not gonna mark that up. But this seems valid though. This seems valid. So you know what? Since we are above the 200 EMA, I'm gonna go ahead and take this trade. I'm not even gonna put it in the Discord, but I'm gonna go ahead and take this trade in this video for y'all to see. And oh, hold on. Okay, so we on a new candle right now. Let's see what happens, bro. Let's see what happens. If we can get it, if we see a break of this wick here, we might see gold go down even further. But if I start to see green candlesticks, yep, we just broke below that wick, so I'm gonna just wait it out. I'm glad I didn't get in. But yeah, back over to the S&P. If we can get a break below this, that'd be really nice. I might even move my TP, bro. If I start seeing like real big bearish candlesticks, and it's looking like there's a lot of momentum to the downside, I might just go ahead and secure my profits and move my TP a little bit lower. I don't know. We're gonna see though. I might just end up trailing my stop right above these wicks here, just so I can secure some profits if price goes back up. But I want to first see it come down further. I want to first see it come down at least like right here before I go ahead and start trailing my stop. All right, so we got a nice push right here. Look at gold. We got a nice push right here. I want to see a bullish engulfing. You know what I'm saying? I really do want to see a bullish engulfing. I don't like to get into trades aggressive too much. I already got into a trade aggressive last week, which costed me. If I would have just waited, I wouldn't have lost money on that trade. But yeah, we got a break of the candle here. We got a nice break of structure here. to the downside. We're below this support level here, so I definitely see the market coming down here. Let me go ahead and move this to $5 in profit. All right, just to make sure I cover commissions, because I don't want any losses on this trade if the market does reverse. We got a nice doji on the gold that look like it's forming. Hopefully it closes that way, and then we see a nice bullish engulf, and I'll get in for a buy. So this is what I'm looking for, right? If it closes like this, like if we see a nice doji, if we don't see price go above this wick right here or below this wick here, and then the next candlestick engulfs this candlestick to the upside, I'm going to be looking to get into a buy here, and then I'm going to be looking to set my stop loss below this demand zone here, and then I'd be looking to take my profits at a key level. So what I do to identify key levels is I just look at the numbers that are zeroed out. Look like we get into a buy. Look like we get into a buy, man. It look like it
order filled.
Up. So I'm in 2 contracts on gold right now. What I do is I look for prices that are zeroed out, like 29.20. You know what I'm saying? 29.10, 29.30. Those are key levels. You feel me? I'm gonna make another video on key levels, showing you guys how prevalent it is in the gold markets, because it's extremely prevalent. Stop loss right at the, I want to say, let's put it at the 29.11 level. I think that's solid. This is why you got to pay attention to the small details, because most people wouldn't have caught that, but there is a gap right here on the 5-minute time frame on gold. It's very, very small, but there is a chance if price comes down here, it'll want to fill that up. So I just want to I want to make sure I'm protecting myself, right? So I'm going to set my stop loss a little bit below it, just to give it, give my trade some wiggle room. Boom, I just put in the Discord that I'm going to go buy. Simple as that. Simple as that, bro. All right. So now we just gonna sit here, wait for it to play out. And yeah, that's it. That's it, man. That's all I can do right now, is just sit here, wait for it to play out, and manage my money. You can see here too, I have this this key level up here marked up 29.30. You'll see why. If we go back here, there's a lot of resistance here. I mean, jeez, resistance here, 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 all over here, like numerous times. Boom. We had a fake out here. We went right back below this line, retested it, respected it, dropped, came back up near it, dropped, came back up right at it, dropped, came back up right at it again, dropped, came all the way down here. We bounced off of this resistance that then turned into support, and this was also a demand zone too that we wicked into. This would have been a beautiful setup, bro. Do you see? Let me draw this up for y'all real quick, man. This is what my trade would have looked like if I would have caught this setup. So I see here we have a wick into this demand. Not even actually, we like wick right above it. But I like this candlestick here. That's an indication that the market wants to go up, right? Especially when you see, even though it didn't wick right into the zone here, it came right above it, and then we had a bullish engulfing right here. So if I would have entered aggressive, this is what my stop would have looked like. This is what my entry would have looked at like, and then my stop would have been right here, right below this swing low here. And then I would have took it up for a 1-to-1. Okay, just like that. And we would have, that would have been like a perfect 1-to-1 setup too, because our take profit is in this fair value gap, and we know fair value gaps are like magnets. We know that price tends to fill up fair value gaps to correct the market. So that's what my trades would have been looking like, man, to be honest with you, bro. But yeah, let's go ahead, see what's going on with gold. I'm gonna go ahead and oh, I didn't even have a stop loss set. Oh, that's crazy. I'm gonna go ahead and trail my stop loss, man. I want to trail it to at least like $6 in profit. Just just in case we get stopped out, I at least cover my You know what? No, I'm not trailing it. I'm not trailing it. I'm not trailing it. No, not today. Not today. We're not gonna do it, man. We're not gonna do it. We didn't even hit it like a 101 yet, so I'm not gonna do it. That's too early. That's too early, bro. I'm being too reactive. Let me chill out. I want to see a break of this candle. My stop loss will be up here if I were to take this trade on the next candlestick. If we see a bearish engulfing, no, I'm gonna just go ahead and secure profits, bro. How about that? I'm trailing into profit, bro. I don't care. Oh yeah, look at gold, man. Look at gold, man. I'm running this up. I'm gonna now trail it right here, right below this resistance here. I want to see it. I told y'all, bro. I told y'all I want to see gold hit this 29.30 level, man. I want to see gold hit this 29.30 level, bro. That would be solid. What's that? 29.22. See, I understand key levels, so I'm gonna place it at 29.20. You feel me? But I'm gonna keep that. I'm gonna set my profit though at that 29.30 level. See, look at the market on gold over here. I mean, not gold. Look at the market over here on MES, man. Like, it's a good thing I trail my stop loss, and that's why I be trailing my stop losses, bro. That's why I like to just trail. I mean, secure my profits, because like I understand, like, when you scalping on them smaller time frames, bro. When you scalping on them smaller time frames, man, the market can reverse on you so quick. You don't have to really worry about stuff like that on the higher time frames, you feel me? But another thing too I wanted to add just for confluence, like another reason why I was looking for buys on gold is because I understand that the markets right now is shaky, you know what I'm saying? Because people are fearful of the economy, of the state of the economy, right? With everything happening with Trump, Elon, the tariffs. Sometime yesterday, Bitcoin had hit its 90-day low. I checked my portfolio and I saw that every crypto that I was in was just tanking. XRP, Cardano, Solana, Doge, Bitcoin. I got some more cryptos too. Some different cryptos I'm invested in. There we go.
Order filled.
Order filled. I'm done for the day. I understand that with a big old candlestick like this, we're creating fair value gaps. Market might pull back into this zone here and then see a rally up to that previous week's high. So I'm happy with what I made today. I made $262 profit today. I am done for the day. And as you can see, if you look over to the left, this is perfect time how everything just panned out. As you can see, we got my trail stop got smacked right when the market reversed, right when it pulled back. I'm not gonna say reversed, that's one candlestick, but right when it pulled back on this 5-minute time frame, you see on MES is when it shot way up here and would have smacked my stop loss if I didn't trail it into profit. That would have been a losing trade. Y'all see it, and I told y'all, look on this next candlestick. Y'all see it's coming down on gold, right? Look at the right chart. You see gold, right? You see this next candlestick, because it's 9:40, so it's a new candlestick now. We're on a 5-minute time frame. It's coming down. I told you, when we create fair value gaps, those fair value gaps are like magnets. So what tends to happen is the market will correct itself by filling in those gaps. So that's why I trailed my stop loss so tight once we got way up here, because I'm like, okay, this is a really big candlestick. We have resistance here, so that coupled with a huge candlestick like this creating fair value gaps, I'm assuming the market is going to come back to this level here where we see resistance, right around 29.22, and then it's going to go back up and then hit our hit the previous week's high. So there you go, man. There you have it. Before I even looked at any, like, before I even went into the smaller time frames, I started off at the weekly. Okay, before I started recording, I had started off with the weekly. Oh, it's looking like we might get a push up higher. I started off at the weekly to see where we're going. Yo, look at MES right now, bro. Look at MES, man. That's stuff like that is expected to happen because it's 9:40, right? So at 9:30 the New York Stock Exchange opens. Usually you see stuff like that happens every week, bro. Every week, if not every day of the trade week, every other day, you're gonna see price shoot up or you're gonna see price crash a lot or for a bit around that time. I'm telling you, go back test and you'll see exactly what I'm talking about. But yeah, man, started from the weekly and then I went straight down to the 5-minute. I didn't even go from the weekly to the daily to the 4-hour to the 1-hour to the 15-minute. I looked at the weekly. I marked my week by the previous week's high, which is 29.30, and the previous week's low. I saw that we were approaching the previous week's high. We were much more closer to the previous week's high than the previous week's low. And I understand that with the markets being fearful, you're going to want to look for buys anyways, because when the economy is going down, gold is going up, right? That's just basic knowledge right there that everybody should know. When the markets are fearful, gold is going up as a result of that, because human psychology moves the markets. But I've said enough. I've showed enough. Now I will be letting my Discord know that the trade that I put in for MES hit TP. If they held, it didn't hit my TP. I trailed, you feel me? But I trailed my stop loss and it got hit, as you can see. But that's all good. I could have had probably a $300. I could have had a $300 day for sure if I would have caught this whole swing down here. I could have had a $300 day. But I'm gonna take my $262, man. I'm gonna take that. Y'all saw I was only trading 2 contracts at a time. Imagine I'm trading 4 contracts, 5 contracts at a time with these trades. It's over with. Bro, that would have been, instead of 260 something, you feel me? That would have been 420 something. You know what I'm saying? That would have been $420 some profit right there. So I'm happy with what I got. I'm blessed. I understand how shaky these markets can be, so I'm not gonna over trade. I'm gonna go ahead, lock myself out manually for the rest of the trade day. Y'all see it right here. I'm locking myself out manually. This is called having discipline. This is called having a system. This is called having risk reward management. That is key. That is more important than having a grail trading strategy. I don't care if you have the best trading strategy in the world. If you have bad risk management, you may be profitable here and there, but you will not be profitable in the long run. I promise you that, bro. So yeah, man. So yeah, you have a blessed one. Peace. I'm out. Stay safe, and let me know what y'all think in the comments. I'm out.